Good evening, everyone. Welcome to the official YouTube channel of Officers Adda 24/7. So first of all, let me know how are you all, and also let me know in the comment section is audio, video both are okay. Are we good to go? So this is the new series that we started for all of you. So as you know, we were having the Achiever series. In Achiever series, we have discussed all the units. It means all the 45 units we have discussed in the Achiever series, and now we are starting the another series in which again we will be discussing the same 45 unit, but now the questions will be advanced. When it comes to the Achiever series, we have discussed the nominal questions, or I can say the one-liner questions, but now we will be having more advanced questions, like the typical type kind of questions. Typical in the sense, like let's say for example, statement based questions, filling the blanks questions, match the following questions. So these type of questions we are going to have in this series, and this is our first day of this series. As you can see, this is for your victory batch. So the series is your victory series, in which we will be discussing each and every unit of your IE IFS. Okay, so before moving forward, I will be your mentor for IE IFS and PPB for JAIIB exam, and this session will continue from now onwards, Monday to Saturday, only on Officers Adda 24/7 in the evening at 7 p.m. Okay, and these sessions are very important for all of you, so do make sure you regularly attend this session or watch recording of this session as per your time schedule, but do not miss any session right now. Okay, so let's start. And if we talk about today what I am doing here in this series, so this is our first class. As you can see, it is saying that this is the class 1 of your IE IFS victory batch or victory series, I can say. So in this, what I am doing, first of all, we are discussing IE IFS subject. As you know, in this subject I am starting with the module D. So first I will be covering module D in advanced questions pattern, and then I will move forward to another modules. Why I am starting from module D? Because you can see it starts from the unit number 29 and ends at the unit number 45. A lot of content, or I can say a lot of topics and subtopics are there. So the big syllabus module D covers, and if the syllabus is big, it's very obvious the number of questions will be more from this particular module, and we will be needing proper time to revise the content, to practice the content on the before the exam. At least 2 times revision is mandatory for your syllabus. So that's why I'm starting from module D, starting from the unit number 29. Then I will go forward till towards your 45, then module C and A and B we will be discussing. Okay, so if we talk about today's topic, we are going to discuss today the first unit of your module D, that is financial markets. Okay, so do remember IE IFS, these victory sessions we are starting from the module D, unit number 29. This is our first class, and regularly you have to join this batch or this session at 7 p.m. only on Officers Adda 24/7. Okay, so let's continue. And if I talk about financial market, what actually is financial market? So as we have discussed in the one-liner question series as well, that financial system is simply a system where we exchange funds among the persons who have surplus money and the persons who have deficit of money. So when we exchange these funds among these people, that system is known as financial system. And there are people who have surplus money, there are people who have deficit of money, and to exchange funds among them, we need a platform. We need a such kind of platform where we will be capable of making sure that the money will be exchanged among them. So let's say I am the individual person, so I am the party here who have a surplus money, and you are a businessman and you are starting your business, so you are a party of deficit of money. So now I do not know you, and you as well do not know me. How we are going to fulfill our needs of capital? So we are going to do that with the help of financial market. So financial market provides us a platform where two parties can come together and exchange their funds with each other to fulfill their requirement of money. Okay, to fulfill what? To fulfill their requirement of money. That's why the financial markets we have here. Okay, now next, if I talk about the further, you can see there are segments of financial market. There are what? There are segments of financial market. In financial market, we are using financial instruments to fulfill the need of money for short term, long term, or the different durations. So there are segments of financial market, and when it comes to segments of financial market, we have money market, we have capital market, we have derivative market, we have debt market, we have credit market, we have insurance market, we have pension market, we have mutual fund market, etc. All these are the segments of financial market. They are what? Acha. We also have foreign exchange market. Okay, so all these are what? These are the segments of financial market, and all these segments of financial market we have to cover in the unit number 29 of yours. Okay, in which these markets will be covered by us. Now the next thing is, if you talk about the other chapters of your module D, so you will find we have a money market, capital market, we have foreign exchange market, we have merchant banking, we have derivative market, we have your mutual fund market, we have insurance product, we have pension product. So first of all, in unit number 29, we are just going to study the introduction of all the segment of financial market. We are going to do what? We are going to study the segments of financial market. It means what actually the money market is, what is capital market, what is your derivative market, what is your debt market, just the introduction of these market. Because in the further units, we are going to discuss each segment of financial market in detail. Every instrument under the market will be covered in the individual unit. Okay, and as we know, financial market have a certain segments, and the different segments of market will be regulated by different regulatory bodies. Okay, so like here, if I talk about money market, regulated by RBI. If I talk about capital market, regulated by SEBI. If I talk about forex market, regulated by RBI. The merchant banking, regulated by SEBI. This is the only type of banking. Merchant banking is the only type of banking which is regulated by SEBI. Now derivative market, regulated by SEBI. Mutual fund, regulated by SEBI. Insurance product, regulated by Insurance Regulatory and Development Authority of India. Pension products, regulated by Pension Fund Regulatory Development Authority. So these are the regulatory bodies of the different segments of market, or I can say different financial markets. So do remember who regulates which market. This is important, Hana. This is very much important. Apart from that, today's topic will be financial market, in which we are going to discuss the introduction questions of the financial market. Okay, so I guess till now everything is clear to all of you. Now let's move forward and talk about the first question. So you have to answer, and I will let you know if your answer is correct or not. So the first question, acha, I have prepared, what I have done, I have prepared the individual question on each and every segments of market. Okay, in which on each and every segments of market. So first we have a question on the credit market. This is what market of your, this is a credit market that's regulated by RBI. Who regulates this? RBI regulates this market. That's a credit market. Okay, apart from that, if we talk about the major institutional preview of credit in India are dash. The non-institutional or unorganized source of credit include dash and sellers for trade credit. An important aspect of the credit market is term structure, which is dash and long-term credit. So with banks and NBFC predominantly cater to short-term needs, financial institutions provide mostly medium and long-term funds here. So these are the four options in front of you, in which you have to answer which of the following is correct. Let me know the right answer. A, B, C or D, which of the following is correct? Okay, so the right answer is actually the first one is talking about institutional previews, means the formal financial system. And if you talk about non-institutional, that's a informal financial system. That's what? That's an informal financial system we have. Okay, so first we have here institutional, that means a formal financial system. Non-institutional, it means an informal financial system. So when it comes to the formal financial system, who are the parts? Banks will be the parts, all India financial institutions will be the part. So all the three first options of the filling the blanks is correct here. Okay, second is talking about your non-institutional, it means informal. So it covers here money lender, indigenous, bankers. Here it is saying development financial institution, they are not informal financial system part. So the B option have been eliminated. Okay. And the third one is saying NBFCs. NBFCs again are not a part of your informal financial system. This will also be eliminated. So now you have two options, A and D. So now let's cross check the A option. First is saying the major institutional preview of credit in India are actually banks. It is actually banks. Banks include your commercial bank, cooperative bank, differentiated bank. Differentiated bank means a small finance bank. And non-banking financial institution, we have NBFCs. Then the second filling the blanks is saying that the non-institutional or unorganized source of credit include the money lenders, the sahukars, the indigenous bankers. That is also true. And when it comes to the term structure, so the term structure we have short term, medium term and long term. So here we have short term, medium term and long term. So the right answer will be A option. The right answer will be your A option. Okay, right answer is your A option. So right answer will be your A. Next question. Money market performs the crucial role of providing a conduit for equilibrating short-term demand for and supply of funds, thereby facilitating the conduct of monetary policy. The money market instrument mainly comprises dash. So you have to answer money market is actually, this is the second question based on the second market. So that is regulated by RBI. It's a short-term market. Short-term financial assets will be used for what purpose? To raise capital. And these are the close substitute of money. Clear? So the right answer here will be your, which of the following? A, B, C or D? And when it comes to the money market, first is saying call money, second is saying certificate of deposit, third is saying intercorporate fund, second is saying treasurable, other short-term government security transaction, repos, banker acceptance, commercial bills, commercial paper, and the D is saying all of the above. So which of the following you think is actually a part of your money market instrument? A, B, C or D? Which of the following is correct? Achha, just now I got an information, I am recording this session and I got an information that your JAIIB May 2023 dates are out. Your dates are out, guys, and your first paper will be 25th of May. That will be your IEIFS. Second paper will be PPB, that is 26th of May. Now this is a big challenge because in IEIFS and PPB there is no gap. 25th of May you will have your IEIFS, 26th of May you will have your PPB, 2nd of then you will have a gap of 1 week, then you will have AFM. Yeah, on 2nd of June you will have AFM and 8th of June you will have retail banking and wealth management. So your dates are out just now and I am informing you in the recording session. 25th to 8th of June you will have your dates of JAIIB May 2024. Okay, now the right answer for this question will be D, all of the above. In the end I will show you the website as well for the details. So right answer is all of the above are actually the instrument of money market. So money market is a short-term market and includes all these kind of instrument. Call money is for overnight, certificate of deposit is for 7 to 364 days. Intercorporate funds is simply your unsecured instrument that corporates give loan to each other. treasury bills issued by central government. There are state government securities also, like state development loan. Repo transactions are there. Bankers acceptance, commercial bills, commercial paper, all are there. Now, right answer was D. Now, the third question is about the third market. And the third market we have here is a debt market. Debt means a loan market. Debt means always a loan we are talking about. So, it consists largely of government security and to a smaller event corporate bonds. The government securities is a tradable instrument which is issued by central government or a state government. And it is a document of the government's debt obligation. So, long-term securities are also issued by state government and these are called dash. The securities which are issued by state government. Okay. Next, companies raise funds for longer periods, say 5 years to 10 years, through issue of a typical long-term debt instrument that is known as dash. So there are 3 filling the blanks you have to answer. First of all, let's eliminate the option. The first filling the blanks is talking about the long-term security that are issued by state government. And we have treasury bills here. So we have discussed a lot of times, treasury bills are issued by central government, not by the state government. So the A and C option have been eliminated. Now further, if we talk about long-term securities are issued by state government, that is state development loan. Second, when the company issue 5 or 10 years longer period security, that's not a part of your equity. Equity is a share. Equity is not a part of debt market. Equity is a part of your equity market, that's a capital market. If you're talking about debt market, debt means those instruments which actually takes loan from the market for a certain fixed maturity period with the fixed rate of interest will be paid back. So right answer will be your here B option. The state development loans are the state government securities. The companies issue corporate bonds, and for the infrastructure companies can issue debentures. And these 3 are your what? They are the debt instrument. All the government security, bonds and debenture, they all are the debt instrument. Whether it is a central government security or a state government security, they are a debt instrument. So right answer was D. Sorry, B. Right answer was your B. Okay, next question. Now, next question have next market in it. Let's say foreign exchange market, which is regulated by RBI. Who regulates foreign exchange market? RBI regulates the foreign exchange market. Okay. So consist of banks, that is authorized dealer, who are allowed by RBI to participate in foreign currency. Those are known as authorized dealer. Then we have customers and RBI. So the forex in India developed practically only after dash. Now, if you remember the year, you can easily eliminate option here. It is 1999 or 1978 or any other year. Hana, if you remember the year, you will be easily able to find the answer or eliminate the option. Let's move forward. Prior to that, banks were permitted to conduct only merchant transaction and their cover operation. In the same year, banks were permitted by RBI to take trading position as well. So now next we're talking about post-liberalization. It means after liberalization that happened in 1991. The economy was open to a great extent and India became practically convertible on dash account. So India became convertible in capital account or current account. So now you can eliminate answer here. And that will be your current account, not a capital account. So if we talk about balance of payment have 3 types of accounting: current, capital and your financial. And you have in your syllabus 2 types of accounting, that is current and capital only. So current account is allowed by RBI to have a fully convertibility. Fully convertibility is allowed here, but in the capital account, it is not fully convertible allowed. So that's why you can eliminate the A option. Now next is saying this led to increased turnovers in forex market, which rose approximately $6 billion daily in 2000 to $70 billion daily at present. So which of the following? Both are same. Actually, the right answer will be 1978, the current account and the $70 billion daily. So you will only be able to answer this question if you remember the data of the content, like the year of the content. So in 1978, RBI allowed banks that yes, you can participate in the trading of your forex market. Before that, banks were not allowed to participate in the forex market. So right answer will be your C option. Okay, right answer is C. Next question. Next question we have, which of the following statement Which of the following statement is correct about derivative market? So next question, next market we have, that is the derivative market regulated by SEBI. So derivative is a product whose value derived from basic variables that is known as your what? That is known as your underlying assets. So derivative value will be decided on the basis of what? On the basis of your underlying assets. Okay, so these are the 5 statements in front of you. Do read them and let me know which of the following will be right answer. Okay. So here the right answer will be your first is saying its value changes in response to the change in a specified interest rate, security price, commodity price, foreign exchange rate, index of prices or rates, credit rating or credit index or similar variables, which is called underlying. So this is true. Obviously derivative value will be derived from another product. So this is true. Second, it requires high initial net investment. High initial. No, it requires zero or no initial net investment. So this is wrong. The first is correct, second is wrong. It is settled at a future date. That is true. Derivative will always be settled on a future date. In India, different derivative instruments are permitted and regulated by various regulatory body, that is RBI and SEBI. This is true. So first is true, third is true, fourth is true. Now the fifth is saying derivatives are of 2 types. The first one is over-the-counter derivative. Second one is exchange-traded derivative. This is very much true. Over-the-counter derivative have a counterparty risk. Now, what does counterparty risk means? It simply means that the other party in the future can somehow breach the contract. Okay, so it always have a counterparty risk, and exchange-traded derivative includes the mediators here. And when the mediators are part of here, that means it means simply that what we can say, we are having a market or we are having a trading where there is a mediator, that will be stock exchange or multi-commodity exchange, and now there is no counterparty risk because now the mediator is available, which is a regulatory or a stock exchange which is registered by the SEBI, and they cannot perform any kind of breach in the contract. So that's why exchange traded derivative do not have any counterparty risk, but the second one, over-the-counter derivatives have. But if you see this will be looking like a true statement, but no. Over-the-counter derivative do not include futures. Futures are the standard contracts. They are the part of exchange-traded derivative because there is no counterparty risk in future contract. And the forward contract here, the forward contracts are actual part of your over-the-counter derivative because forwards are risky. There is a counterparty risk. So you can see fifth is also wrong. So second and fifth is wrong. All the other is true. So you can answer all except second and fifth. All are true except second and fifth. So right answer will be your D. Right answer will be your D. Clear? Next question. Next we have here okay. So we were talking about here capital market. So first of all, capital market regulated by SEBI. SEBI regulates the capital market. And when it comes to the capital market, long-term equity and debt market, capital market includes both the equity and debt market. So the capital market provides long-term debt and equity finance for the government and the corporate sector. By facilitating availability of long-term finance, the capital market mediates between the conflict of maturity preference of lenders and borrowers. So capital market is a long-term market, okay, that is for more than 1 year market, we can say. And in the capital market, trading of equity and debt both happens. And the next thing is that the capital market also facilitates the dispersion of business ownership and reallocation of the financial resources among corporations and the industries. That's what we're talking about in the capital market. So in both equity and debt market, there exists dash and dash capital market. So if you are a part of, right, if you are a part of the paid batches, so you remember we have discussed the capital market have a two types of trading pattern. It means there are two ways for trading in the capital market, and those ways are primary and secondary. So primary market is also known as a fresh issue market or a first issue market, and the secondary market is also known as a market of existing securities. Whenever it comes the markets, whenever we talk about primary and secondary market, there are two types of trading pattern of the capital market. In primary market, the new issues will be given by the company, purchased by the investor, and in the secondary market, already existing securities will be sold and bought by the investor or the shareholders. So here the right answer will be actually both A and B, because I have done a little bit mistake here in creating the options. Primary, secondary, or you say secondary or primary, they both are same. Okay, so I have done a little bit mistake, but yes, the answer will be A and B both, because the primary market and secondary market, these two ways are there in the trading for the capital market. So do remember, capital market is regulated by whom? It is regulated by SEBI. It covers equity and debt, both markets. Now the next question, the next market, and because I can see here we are talking about Adda, so this is about the insurance market. So in an increasing competitive economy, the need for insuring against risk is well recognized. In India, the insurance industry is broadly classified into life insurance and non-life insurance business. In the wake of financial liberalization during early 90s, the Committee on Reforms of Insurance Sector chairman, you have to name the chairman of this committee, recommended in 1994 the opening up of insurance sector to private participants and institution of separate regulatory and development authority. Now accordingly, Adda Act was enacted in the year dash and separate insurance regulatory and development authority was set up. So there are two filling the blanks. First, you have to answer the name of the chairman. Okay. Second, you have to answer in which year this Adda Act was enacted. So you have to answer these two things. A, B, C or D. So which committee it is? It is A, B, C or D. So right answer here will be your, if it is an insurance market, it is actually your Malhotra committee. Always remember, if it is related to the insurance market, it's a Malhotra committee. If it is related to a venture capital, it is a Bhatt committee. So right answer here will be your A, that is R.N. Malhotra committee. And the Adda Act was established in the year 1999. Okay, in which year it was established? In 1999. Okay, so right answer here will be your A. Right answer is A, R.N. Malhotra committee. Okay, so there are many committees which have a different, I can say, there are the committee have been formed for different reasons, but when it comes to the insurance, Malhotra committee is fixed. When it comes to the venture capital, Bhatt committee is fixed. If you talk about Rangarajan committee, if you talk about, let's say, your Narsimhan committee, a lot of time these committees have been created. Okay, now next, which of the following statement is are correct about mutual fund? So first of all, who regulates mutual fund? SEBI regulates mutual fund. Okay, who regulates mutual fund? SEBI regulates the mutual fund. Clear? Now, next thing is SEBI regulate mutual fund, though mutual fund also have formed as a self-regulatory body in form of MFI, which is an industry body of mutual funds. The next thing is we have a mutual fund operates through its asset management company. A mutual fund is a trust that collects money from a number of investors. A mutual fund scheme can be classified in open and close-ended. Mutual fund is a mechanism of pooling the resources by issuing units to the investors and investing funds in security in accordance with the objective as discussed in the offer document. So you have to answer here which of the following is correct about the mutual funds. So right answer here will be all are correct. All the statements about mutual funds are correct. So right answer will be all are correct. Do remember mutual fund is regulated by whom? It is regulated by SEBI. And the another thing is AMFI is simply a self-regulatory organization. Okay, so as we were talking about the insurance market, it will always have a Malhotra committee. Now the next question is talking about here, that is your, which of the following is are the function of financial markets. So we have discussed the segments of financial market, and on each segment I have discussed one question with you that will contain the introduction of the particular market. Now what are the functions of financial market that it is asking about? So you have option price determination, funds mobilization, liquidity, risk sharing, easy access, reduction in transaction cost and provision of the information, capital formation. Out of these you have to answer which of the following is the function of your financial market. So when it comes to the financial market, it obviously a platform where you make sure that the person with surplus money and the person with deficit of money, they come together at the platform and exchange their funds. That what actually a financial market is. And here if we talk about the functions of financial market, all are the functions of financial market. So your right answer will be all are correct. All are the functions of your financial market, right? Now, so right answer will be your C, all are correct. Now next question we have, which of the following is are the number of factors which determine the levels of price discovery? Which of the following is the number of factors which determine the levels of price discovery? First is saying supply and demand, second is saying attitudes to risk volatility, third is saying available information, fourth is saying market mechanism. So now price discovery is a very important concept. It's a very important tool for each and every market. It's not only for the securities like shares, bond, debenture, etc. It is for basic commodity as well. The decision of price making is very much important for this marker, for this jacket, for this shirt, for this mic, for this board, or all the shares, bonds, securities, each kind of security. So everywhere the price discovery is having a very important relation, having a very important what we can call it very important aspect of all the trading. Okay, so now which of the following are the factors which actually determine the level of price discovery? And each of these are the factors. Supply and demand, the market forces, very important factor which determine the price. Second, attitude to risk, how much ready you are to take a risk. Okay, then what available information you have, because whatever information you have available, the more information you have, the more sound decision you can take. Then the market mechanism. So right answer will be all of the above are the factors that tells you that level of price discovery. So right answer will be your D. Okay, so this is all for today. Now let me know how many answers you have given correct. And one more thing, after this session, do one thing. Just go to the content of your unit number 29, check the content of your book that IIBF has given us, and then come back to this session and check. I have put every kind of question here. So whatever content is there in the unit number 29 and whatever question can be made from there, that I have made for all of you in this session. So this victory session will be very important for your preparation, because whatever the content you have From all the content, I will be making questions for all of you so that you will be prepared and definitely you clear your paper in May 2024. So do make sure, do not miss these sessions. Apart from that, this is the information for all of you. AIM batch, that's a new batch starting from 26th of February, and this batch will be available for all of you at the maximum discount, and the code will be Y496. Okay, and the code you can use Y496, maximum discount will be available. Apart from that, Mahapack is also available. How to enroll? Just to enroll, first download the Adda 24/7 application. After downloading the application, what you have to do, just go to the exam category here. Okay, scroll down, select the JAIIB, CIB, click on JAIIB May 2024, you will find the AIM batch. Do read all the details, scroll down, and once you scroll down, you will find the study plan as well. So AFM, PPB, RBWM, IFS, all the 4 subjects study plan is available in front of you. If you want to check any study plan, just click here. Once you click here, you will find from 26th of February, we are starting PPB subject. We are starting with subject. We are starting PPB subject from 26th of February. And the first class will be 7 to 8 p.m. Module A. First orientation class will be there. So Prabha ma'am will take module A and D. I will be taking module B and C of yours in the PPB. And all IEIFS subject will be taken care by me. Okay. So how to enroll? Just check the study plan. Click on the buy now option. If you want more than 75% discount, use the code Y496, apply. Once you apply, you will get 77% discount here. 1% additional discount will be available if you purchase from the Adda 24/7 application. So 78% discount, 6 months validity, coupon will be Y496. Okay, now this is the whole information for all of you, and do not forget to join this session every day, Monday to Saturday at 7 p.m. Apart from that, as I was talking to you, I started recording for this session. After a certain minutes, I got the information that IIBF has released the dates. So how to check the dates? This is your IIBF page, let's say. Go to the examination courses, scroll down, go to the flagship courses, JAIIB, and you will find this is the examination date. So registration is starting from 5th of March, will end on 27th of March. Paper is starting 25th of May. Okay, from 25th of May, you have your first paper, that is IE and IFS, and there is no gap in IE, IFS and PPB's papers. So 26th of May will be your PPB. 2nd of June, you will have AFM, and then 8th of June, you will have your RBWM. So these are the 4 dates you have to remember. And do remember, there is no gap between IE, IFS and PPB paper. So we have to prepare with the good strategy. Apart from that, for October, November dates are already here. From 1st August, the registration will start, and the paper will be in October, 20th October till 9th of November. This will be your exam dates. Okay, so this is the whole information I wanted to give you all. Now let's end the session here. Registration dates are out, so I guess we should be more active now. We have to be more active so that we will be having a proper conceptual study with the revision, with the practice test, everything. Okay, so let's end the session here. If you have any doubt, you can ask in the comment section, and do not forget to join these sessions Monday to Saturday at 7 p.m. only on Offices Adda 24/7. Take care everyone, and start preparing for your paper because this is very high time. Okay, thank you everyone. Take care. Bye bye.